Good afternoon, good morning, or maybe it's good evening. No matter where you are in the world, welcome to Take Stock Live. Today's date is Thursday, March 18th. It's just gone 12 noon here on the eastern coast of the US, 4 p.m. in London, 5 p.m. Central Europe. I know those clocks going forward, springing forward last Sunday early here in a couple of weeks in Europe as well. I hope you're all doing well and happy. This is Sam Evans with you for our show, lasting about maybe 35 to 45 minutes. I hope you've had a great week so far and plenty to talk about on today's show as well. I'm not going to be flying solo as normal. As you know, I love to have a guest. Occasionally, I do the show all on my own. But this week, I'm going to be joined by my colleague. I always say my esteemed colleague, Daniel Bustamante, who's the partner of mine at StockAbility. And remember, this show is brought to you by StockAbility.com. Dan's going to be joining me in about 5 or 10 minutes live from Scottsdale, Arizona, where we're going to be talking about why options. Why now? Options mystify many people. We're going to try and demystify what options are. A lot of confusion about them. Are they something that can be simplified, and are they something that could fit into your trading and investing portfolio, both for your longer term wealth building and maybe if you're looking to generate some extra income, or maybe a side hustle as we like to call it as well. It's like I say, this show is live and I can see live members joining the room right now. Great to have you here. As we're live, I'd love to see your questions coming on. Hi to Louise as well, and Max, great to have you here as well. And please fire your questions at Dan and I in real time. We love to answer questions in real time. It makes this so much more fun as well. But if you are looking at this recording, remember this and every other show that we've had previously is all going to be found on the StockAbility Facebook page, and also you'll be able to find our YouTube channel. And guys, do go and subscribe to our YouTube channel. We are throwing out content like old clothes right now. Okay, I don't know where that one came from, but we are throwing out content right now. Mini lessons, literally from all of our travels, what we're doing, what we're looking at as well. Always trying to throw some things out there, and plenty of complimentary webinars for you at the StockAbility homepage. We'll get to that and talk about all of that in good time as well. But let's go and see where the markets are at right now. It looks to me, looking at the market, that we've had new highs once again. We'll do the rundown of that in just a second, but on the cards today, NASDAQ, S&P 500 hit with another jump in Treasury yields. Market opened lower today. We did see a gap down in many markets, but as we stand right now, those markets are bouncing back. You can't seem to keep this market down. I keep saying it on the show. You've got to be prepared to buy the pullbacks. We'll talk more about that in just a second. But again, those futures did open up lower this week. Today, excuse me, and then bam, we've had a pop on it. I myself was long on the market earlier on, just for a quick scalp in the market. It's getting dicey, but I feel like I keep saying that. We're not getting that pullback we want, but any kind of those sell-offs seem to be just bounding back a little bit as well. Bond traders are continue to battle the Fed on rates. Obviously, Fed holding... Fed was raising its outlook for economic growth and inflation. It cut its unemployment rate forecast yesterday to 4.5%. Jerome Powell was talking yesterday as well. Unemployment rate was 6.2% in February as well. And another hint about the jobs picture, the Labour Department on Thursday morning reported a higher than expected 770,000 new filings for unemployment benefits this week as well, despite relaxed COVID mitigation measures as well. Like I said, you bond traders are continuing to have their battle with the Fed on rates right now. The Fed assured us that near zero rates won't likely raise through 2020, and the 10-year yield on Thursday touched 1.74%. Top Biden officials and Chinese diplomats are set to meet as well, coming up as well. So I'm sure a lot of traders and investors are going to be listening to what this new relationship will be like as our new president starts his new relationship with China as well. The House is also to vote on 2 immigration bills, including one for Dreamers, and federal April 15 tax filing delayed until May 17th, giving everybody here in the US a little bit more time to file those taxes. And also, it's an interesting time. A lot of people being hit with those stimulus checks. One of the things I'm trying to think is, as stimulus checks are hitting people's bank accounts this week, people starting to see money come into their accounts. Where's that money going? Some people using that money to literally put food on their table. Other people using it, throwing it into the stock market. It seems it's going into the stock market from where I'm seeing it. Surveys have been showing that more and more people are throwing money at the market right now. Oh, is it an exciting time? Is it a scaring time? I'm sure Dan's going to have an opinion on that as well. But let's go take a look at the charts right now and see, because it just seems you can't keep this market right down. Pedro the Man is back. Good to see you on here. Parker, I love it. All my regulars coming in on the show. Great to have you here. Let's go take a look at the charts and see. Pulled up the futures for you today, my friends. Got the weekly charts on here. Let's actually make sure we've got all the right charts up here. Love to have the monthly charts up, the weekly charts up, and also the daily charts up here for everybody to look look at right now. As you can see right now, futures were down earlier, down a little bit on the day, but again, literally today opened up gap down, but also up on the open day right now. S&P 500 futures trading at 39.54. We are knocking on the door of 4,000 points. I'm going to put it out there, guys. I think we're going to 4,000 on here. Definitely seeing some nice strength in the S&P right now. Let's go and look at its little brother, the Dow Jones, one of my favorite vehicles. Here's the Dow again. Today has claimed 33,000 and almost 100 points. Another new high for the Dow Jones as well. This is the market that just does not want to quit. We had a nice little gap down in the market day, boom, popped its head up for another high day. Look at this track record, guys. Let's go to a full screen here for just a second and really zoom in and look at this chart on the Dow Jones for a minute. Let me zoom in and see, just look at the amount of up days that we've had in this market. 1, 2 down days in a total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days now with only 2 down days. Buy the pullbacks. That's what we've been talking about. Keep buying those pullbacks. But again, right now, if anyone wants to say to me, well, where, Sam, do I need a pullback? I want to see a pullback down to about 32,800 right now. If you are buying right now, keep it a scalp, keep it short, get in, get out. That's what I was doing today. Getting in, getting out, and I'm done for the day as a day trader. But this does bode well for some of those other stocks. We've seen a lot of other major stocks going on sale in the last few days as well. While we looked at the Dow, the big boys are down there. Let's go see how the good old Nasdaq's getting on here right now. Looking at the futures right now, Nasdaq has had a mixed few sessions if we really look at the price action over the last few days. Mixed day today, big bounce back, but gap back down. Here is a market that seems a little unsure of itself. Me, personally, I think we're in a key area here. 13,000 is a big number and something we need to be focused on. Certainly not a market that I want to write off. But for me, again, when I look at these charts, when I start to see what we're seeing on here, and I look at this on here, looking at this weekly chart, guys, we needed this pullback. And to me, if you want to draw a line in the sand, while this market is holding 12,250, that's the number I've got there. So everybody zoom in and see, while we're holding 12,250, that for me, guys, that's the number there. That while we're holding that, this Nasdaq should stay in pretty good stead at this particular point as well. The other talk is what I call the little prints. We took at the 3 kings. Let's look at the prints on here. The Russell 2000, which has seen a fantastic 2020 and still is trying to push higher. Literally challenging the last week's highs. We had previous highs of around 23.50. We're struggling right now, but again, bouncing back strong. To me, I see $2,300, this whole area here, as the benchmark, as the line in the sand right now, which really does need to be holding. While that holds, and let's hope it does hold, if that thing holds, we should be in good stead. If this breaks, I see it's making all the way going back down to around 2080. Let's zoom in so you can see that. But for now, if that Dow can keep pushing, no problem. Guys, remember, everything we talk about here is for instructional, educational, and more importantly, entertainment purposes only. It doesn't mean rush out and do everything that we say on the show. But what is important to remember on here is, guys, we're just giving an opinion, and this is a market that won't seem to stop. Every little sniff of weakness, everybody's getting bearish on this market. I can only personally say from my own analysis and trading that I've been doing, these broad market indexes don't stop going up. So I just want to keep buying those pullbacks. Ryan Watkins, one of our fellow lead coaches at StockAbility, has been taking a pretty bullish stance on that as well. And I got to say, right now, not seeing the technical weakness. Overall, a couple of other markets for us just to look at right now that we can see. Gold futures, let's just draw on that at 17.30. Gold is a mixed bunch, up $2, $3 on the day on here. But crude oil now, after hitting $65, $66, is seeing a little bit of pressure. Having a big down day, nearly $2.50 down. Is it a buying on opportunity, or are we going to see more downside? Who knows? We will find out when we go and we look at those all-important charts in just a second as well. So in this market, and we see a lot of things climbing up, we see markets really pushing higher, and I want to be looking at some of the big names. You know, let's just take a look at Facebook here, for example, and see, you know, having a strong bounce back on here at the moment after hitting some real key levels on this. Seeing this Microsoft, all the big boys on here, you know, down. We're seeing a little bit of a mixed bag. Apple really struggling lately, I feel, on here to do anything of real significance. But when we look at some of these markets and we see on here, they still remain expensive. And this is a time when, you know, when you've got expensive stocks, we've got to ask ourselves a question. Do we want to be going in and putting all of our money into those particular stocks, or do we want to do this in a slightly lower risk environment? I'm all about return on investment. One of the reasons why I love the futures market is it gives me the best bang for my buck. And it's not just a leverage that you can find in the futures market. You can find it in the Forex market. You can find it in the futures market and the options market. One of the things that definitely has been working better for me and what I've been really love getting involved in more of as of late is the options market. And nobody knows options as well as my colleague and fellow co-founder at StockAbility.com, Daniel Bustamante. Dan should be here right now. I'm going to bring him on whether he's ready or not. And there he is. Dan, is your microphone open? Because why options, why now? That's the subject of today. Before we get into it, can we hear you loud and clear from Scottsdale?
Hey, yeah.
Yes, we can. Your mic is on. You're all good as well. Hey, I like your choice. Invest. Very nice. Yeah. Brothers from another mother, it seems. It's all good. So, how you been, Dan? We haven't had you on the show for quite some time. What have you been doing for yourself?
Busy. So last week I had a quick trip for 3 days to Puerto Rico over the weekend.
I remember you talking about that. So you've been looking at some investment property over there, right?
Yeah. So, a lot of traders have been moving down there. I mean, not recently, but, like Peter Schiff moved there like 5-6 years ago. I know some traders that have a prop firm down there. I went down there in November. So I think I'm going to make the full-time move, not full-time, but part-time move down there.
So you're thinking you're going to be splitting your time between Arizona and Puerto Rico, yeah?
Yeah, for sure. It's just, look.
One hot climate for another hot climate? I mean, is that all you want?
Well, it's not 120 degrees. It's still humid, but the difference, tax differences, number one. And number two, the time zone, we just switched. And so
yeah,
I know anybody on the West Coast feels this. I've done it for 15 years now. Getting up at like 5 o'clock in the morning to trade the markets is just
rough. And the problem is right now, petitions are being made right now here where we're trying to abolish daylight savings. But the problem is it will be keeping it where it is right now for you with 5:30 a.m. start. So So, you're the one who's welcome for when everybody else puts the clocks back, aren't you? It wouldn't actually benefit you too well there, would it?
The 1 hour difference, I'm telling you, if anybody's on the West Coast, if you traded on West Coast hours, the 1 hour difference makes like all the difference in the world. Yeah. I mean, you would think, it's only an hour, but
no.
That extra hour, you're like, oh, you can actually wake up and like process.
5:30, between 5:30 and 6:30, it's early. I mean, I'm an early riser myself. I'm up by kind of 6:30 most of the time on here. I almost feel that living on the East Coast in 9:30 is too late to start, but I like 8:30. Central Time's pretty sweet, but I can tell you this right now: 5:30 a.m. market open. That's rough. And I like my wits about me when I trade, Dan. I don't know about you as well. I don't know. I don't function at that kind of time. I'm a night owl too.
I've done it forever. It's hard. It's not fun. So I'm looking forward to the move here this summer.
Well, it's going to be getting closer to me as well, which is good. I mean, I know I've got my move on the cards as well, but either way, we'll be like passing ships. It doesn't really interfere with us. We do our thing. Technology allows us to do our thing, which is good. And it's great talking about real estate. Last week, we had one of your students on the show, Andrea Gallitz, who's been doing fantastically with her options trading, especially what you've been teaching her as well. Also an experienced realtor. She had a lot to say. So I'd love to get your opinion on as your journey with Puerto Rico carries on, and keep us updated on the show with all of that as well. But we're not here to talk about Puerto Rico as much as I would love to carry on talking about Puerto Rico. I'd like to talk about the markets and the subject of today's show, which is why options, why now? Before we get to that though, Dan, I really want to get your opinion on this. A question we've been getting a lot in our students in our live coaching community at StockAbility, and you're so active in that. And let's bring you up so you can see my charts as well for a second, okay? So you should be able to see my charts too. I'm going to go on over back to just to make life easier, I'm going to just go to the Dow. So I'm just going to go to the diamonds. I was just looking before at the YM. In fact, let me do this, make it even easier, because I'm used to talking in thousands, not hundreds, okay, when it comes to these numbers. You can see the Dow just put in another brand new high, Dan, at 33,112, okay? Another huge high on this market, okay? Another one coming in. I'd love to ask you, Dan, about this, because we're seeing the Dow, nothing seems to be able to stop it. Yet on the flip side of this, all of the markets, you talk a lot about the three kings, the Dow, the S&P, the NASDAQ, and then there's the prince, the little brother, the Russell. We see the Dow plowing on. We're not quite seeing the same ongoing new highs in the S&P, which you can see. And again, I'm going to draw everybody's attention here by maximizing this chart here. This is the daily chart of the S&P. We haven't yet taken out the previous highs of 3,973. That hasn't yet been taken out. And then if we look at the NASDAQ, I mean, the NAS is just really struggling, but the Dow's just going. What do you make of it when markets like this are so out of sync? Does that give you a sign that something's amiss, Dan? How would you interpret something like that, please?
Yeah. I call it the Ponzi sector. So all of like the SPAC companies and a lot of tech right now, that's like, I've just coined it the Ponzi sector. I think a lot of that is deflating. And so that's my opinion on why you're kind of getting this kind of delay or lag on the NASDAQ versus the other markets. Russell, obviously, I think led us this year. So if you look at mid caps, it led, with interest rates where they are. I think that's where you're seeing the lag. You mentioned something before where I got on about Apple. You're like, hey, it's not coming off those lows very well. And I noticed the same exact thing because typically, I mean, how long has Apple been sitting on these lows? It sold
a long while, right?
A long time. I mean, and you and I both know this. When Apple gets to these lows,
it's a buying opportunity.
It always gets bought. Like you could just literally run, 1 year, 2 year leap options on this thing, and legitimately just ride this thing out. But there's no bids on this, and so it's interesting to see. And Baba had the same thing. So Baba as well, another tech. It's not coming off lows. Facebook seems to be leading. I don't know what to make of it other than I think a lot of money is flowing outside of the tech space right now into other markets. I mean, that's my only kind of insight to it. And I think you're seeing a slowdown in that Ponzi sector. I mean, look at, I'm not saying First Solar's Ponzi, but like all these SPACs went vertical, CCIV, Solar, everything was vertical for January, February. Now everything's just kind of detained. So I think that could be it too.
It's an interesting one of the things I've been looking at. Again, let's just bring that chart back over so we can all see it. There's that strength of that Dow. So just on one hand, we've got that powerful Dow just moving like this, and then we'll go on over now to the NASDAQ, and we can just see a weakness, very unusual. I mean, not impossible, obviously, because it's happening. Usually a sign of a lot of different forces pulling against one another, usually a sign of indecision. I think a great debate that we could also talk about here, though, Dan, also is growth stocks versus value stocks as well. I mean, what do you see in the NASDAQ? In the NASDAQ, you've got a ton of growth stocks, right? That's what tech's all about. It's the unknown. You look at the Dow and the things that comprise the Dow, and also the S&P, if you want an even broader perspective. You've got those big value companies in there. To me, I don't see Apple anymore as a growth stock. Everyone knows it's the giant, it's there, it's the Goliath. What are they doing? They're expanding, they're bringing more out there. They've got their subscriptions now. There's a lot going on in this respect as well. To me, I just see that as a value stock, and I think you're seeing that a lot in the value stock. They just slow down a little bit. But I think also with the NASDAQ, just how overbought. I think the growth, like a spring, has been stretched. And all I can say, and again, it's purely speculation, I'd love to get your opinion on, is I look at the Dow and I look at the S&P chugging on higher, and I'm like, yeah, money's flying back to the value stocks. Because let's face it, the world is opening up again, right? We hope, we think. And let's not forget, retail. Everyone's like, oh, the retail's dead. Is it? Because I don't know about you, Dan, but when this thing lifts, I want to get out there and I want to go to the stores. I want to go to movie theaters. I want to be in restaurants. I want to interact with people. And I think that, the services behind that, you look at the big value companies that provide those services that require physical interaction, physical distribution. They're gonna boom. I see casinos, bars, restaurants, retail taking off like a rocket as people come out of this hibernation for the last year. Maybe that's part of it, Dan. What do you think?
Yeah, look, it's funny. It's weird being in Arizona is because it felt like, just to talk about this real quickly before I answer your question.
Sure.
We were kind of in a lockdown for like March, April, May, June, like 4 months. But pretty much everything here has been open. It's weird for me to, like, I was in California for a meeting 2 weeks ago. I had a layover in Miami, and everywhere else seems to be locked down. So it's weird for us because I've never like seen it as a lockdown, right? I mean,
they never really locked that down much, right? Yeah, exactly.
No, and really at all. And if anybody's from the Arizona area, you know exactly what I'm saying because it hasn't felt locked down to me. So I can't understand people like their experience with it. But to answer your question, yeah, I think a lot of these stocks are going to break out. If you look at Cheesecake Factory, ticker symbol CAKE, so that came up those extremely well. It's kind of taken off. You have STK, which did just open a new restaurant here in Scottsdale. Kind of not really my scene, but it's kind of like the in thing right now, these steakhouses. So that hasn't really taken off. Rolls-Royce, like $1 a share. Darden was on the lows and took off. So a lot of these stocks are starting to break out. My concern is, and I was trying to figure this out on Sunday, is what names have yet to rally on called the reopening stocks, right? So American Airlines didn't really rally. So 2 months ago, I know in the wealth class, we got long American Airlines. It finally broke out. I was looking at JetBlue, but it's still kind of, I feel like it's rallied a little too much. So what I've been trying to do is figure out when the economy opens, what takes off. But I'm also concerned that the market already priced that in.
Yes,
So,
yeah.
right. Like I'm really concerned because smart money, especially I know on cake. I remember cake last, which is Cheesecake Factory last like June.
Mm.
There was like a $60 million leap option order or something that came through. I remember
Huge, yeah.
massive trade come through. So I'm wondering if that's priced in, but I definitely think when we open, you're gonna get this push. I still think there's a lot of growth, and I agree with you on Apple. I don't think it's necessarily a growth company anymore. I think realistically, if I was Tim Cook or Tim Apple, I would spin off. I would spin off some of those entities, right? I would spin them off the balance sheet.
Yeah.
That's what I would do. I think that helps the stock because it is weird. It's not growing. I think Microsoft has some potential. Visa just signed something or discussed about taking Bitcoin at the payment processing terminals. I still think there's growth there.
Yes.
As to what we define as value, I'm not sure anymore, to be honest. Because
it's hard. It's a different.
Hard, man.
It's a different,
Yeah.
and it's very deceiving. Like you mentioned, American Airlines. I pulled the chart up while we're here right now. And then, you look at this and go, well, look at the rally it's had and everything, and it's looking strong and so on. But then when you really, and don't get me wrong, I think the airline industry for sure has got potential as we reopen. Like we heard summer break and everything, airline travel is up to record levels again. People are not afraid they're getting out there. But the challenge is you look at this chart and you're like, well, man, look at the monster move on here. This is a strong stop. But then I like to look at the market from different perspectives. We branch it out and then we look at it on a monthly perspective over here. And you're like, this is actually a little overbought right now in the context of it. And probably not a great time coming into this area here to be a buyer of American Airline. This is that spot. Like you said, maybe it's already been factored in over this last period of time. It needs more of, like I say, a pullback before then we can go higher. Sure, it's a value stock. Airline travel's not going anywhere, but I think people can get into it at the wrong time. Wouldn't you say, Dan? And we factored that in for the last year. Maybe we'll see some profit taking in those stocks, pulling it down and then get back into it. When I talk about value stocks as well, and you see Apple, maybe the problem we're not seeing is, and we look at Apple, is it's not getting that rally because is it that cheap right now? Yes, it's got massive potential, but I think you need big market sell-offs to really get the best price on those value stocks. Wouldn't you say?
Yeah, look, last week or 2 weeks ago when we were selling off, I was like, okay, finally, right? So
right. Get some bargains, right?
Yeah, I was like, finally, okay. So the market, I was like, all right, the market's going to pull in. Tesla got, hammered from 800s. Apple's pulling in. Lending Tree, TREE, which is, I'll talk about in a second. A lot of these stocks are coming in off highs. I'm like, okay, look, we're finally going to make this happen. I can put on long exposure and leap options, years out. I can seriously start to load up to like 60, 70%, and keep 30% cash in the book. And we never really got there. David Tepper came on. I don't watch CNBC. I know he came on. And he talked about, and he kind of got the market to bottom and it popped. So then Powell yesterday basically coming out and saying, another 2 years so they raise. Look, I don't believe him. I'm in this long thread with somebody from Gavical Research, and these guys are way smarter than me that I talk to every day. And they're trying to figure it out. We're actually having a discussion right now on this. But I don't know why we're not pulling back. I'd like it to pull back, but in the same sense, American Airlines did really well for me, I think, recently. First Fisker Karma I got out of. I always try to say First Solar on that. Apple, I want to buy this, but I want to buy leap options on this stock, right? And I want to buy a lot of them, but you're not coming off those lows, right?
No, we're not seeing a nice continuation at the moment as well.
No, I like Visa long. I threw some deep in the money calls on Visa Monday or Friday, forgot. I really like that thing long. I like Microsoft heavy. I talked about that pretty heavily in our options room.
Yeah. So
for those of you who don't know, we have a Slack channel it's not like a Discord. I know Discord's kind of the thing right now. But we talk about markets. We have like a different, we have an options channel, like futures, etc. channel. So in this channel, I was discussing, being long Microsoft, being long Visa. I really like this Visa play long, right? And I know it's at all-time highs, and even for me to say that when
Yeah.
like it's a big deal,
You've
right?
got a
Because
bit of a perpetual bear in you as well. So for you to say that, that's a big
yeah,
deal,
no,
Dan.
for sure. So look, there's no question that I love market sell-offs, right? And the only,
Yeah.
and not just because I like to see like market value dissipate. It's twofold. Number one, when markets sell off, the rate of change at which they sell off, that velocity, makes options increase that much more. So you're using put options directionally to bet against an equity. When that velocity of a sell happens, the options premium increases massively.
Yeah.
Okay, so I love that. Number two is if we could just get these pullbacks, we could get better positions on for longer term trades, right? It's
Yes.
not that I don't want to be a bull, but you've got to get me a sale price like I can buy leaps on these
Give me a
companies.
decent price and I'll buy it all day long. That's what you're basically
Of
saying.
course. You know, you're not. It's like the housing market now. I know last week Andrea was on, but it's like here in Arizona. I mean, it's ridiculous. It's like $800,000-$900,000 for any. I mean, at least in like a certain area where it's just like I'm not going to play that game, and it's kind of the same way with the markets right now.
Dan, I've been saying it. It's history repeating itself. The Roaring Twenties, we know what happened in 1929. We're back in the 20s again. People say, "Oh, nothing can happen again." It always does. History repeats itself. Different generations. It's a scary thing. But that ties us in quite nicely right now because, look, let's talk about this for a second. This morning I posted a video. I'm posting a video in a little bit about a trade I did on the Dow Jones. I was long right on the open on the futures, took a decent 100 points out of it. The market's gone even higher. I've been a bit more aggressive on my profit taking. Now I'm using leverage when I trade those futures, but I day trade and I'm happy with the profits I take, but I'm always cautious and aggressive because I expect that turn can happen, but where we're at. So I try to get in. So I feel that, we have to be optimistically cautious, if that's a phrase that we can talk about in these markets. That's where, though, alternatives like options come in. And as we're talking about why options right now, because do you feel that options give us a safer way to dip our toe in the water, especially when we're at highs like this, Dan? Is that to you a better way? Because, I look at Visa right now, and if we look at this chart of Visa that we've got, I've marked off key levels. I mean, I like what you're seeing as well. I mean, I can't believe I'm saying this. 5 years ago, I'd be like, no way would I buy this. But yeah, 220 that I've marked off here in purple, 200 are key areas that they hold. We should break higher and, trends carry on. But the thing is, I don't want to put cash in. I don't want to be laying out $220 a share for that. So how do options give me a cheaper and safer way to take part in that market, Dan?
All right. So a good question. So typically, and this is where a lot of new investors falter, right? And I'm not, however way you make money, just keep doing it. But a lot of new investors falter because they look at a stock like Visa and like, oh, it's $220 a share. I've got 30 grand in my brokerage or investing account. Okay. So if I buy 50 shares of that, right, it puts me at 10 grand. So you're like, oh, I'm not getting enough bang for my buck. So typically what happens is they go to like a penny stock or a stock that's deemed less expensive dollar wise. And you go down that rabbit hole, which we won't discuss here. So the way that you do this, and this isn't like my way of saying like it's just a lot of really smart hedge funds or really professional, money managers do this. Okay, you have stock replacement through the use of longer duration options. So whether you're going to use a deep in the money option that expires 6, 9, 12, 15, 24 months out, or whether you use an out of the money option that expires 6, 9, 12, 15 months out, what it allows you to do is not lay out $10,000 for 50 shares of Visa. Mm-hmm. It might cost you $1,000 or $1,500 or $2,000, but it gives your portfolio exposure to a bull run in Visa stock. Additionally, right, you're not having all that capital tied up, so you can express your views in the market with that additional capital. And finally, if that works, let's say Visa trades 250, so you get a 20% move there, and you bought $10,000 worth. So great, you made 20% on your money, $2 grand. If we get a move like that, and one of these in the monies or these leap options, and just as arbitrary number, you're probably going to be at more than $2,000 in that option, depending on what you pick. Okay, so it makes a lot more sense, and I think people that feel if like, hey, I don't have enough money to invest, or the stock's too expensive, you need to understand that Wall Street has created all these new financial products. Not new, but you've got to look at the markets and understand there's products there for you to use.
Yeah.
And one of those products are longer duration options. And I know, and it's partially my fault, even with old students, the short-term options, I kind of have a tendency to kind of talk about too much. And people forget about the long-term ones. But the long-term ones work, especially for those people that don't want to day trade, or you don't want to look at your P&L swing every day.
Sure.
The longer ones are better around.
Well, so. But you say, the thing is, I talk about this a lot. I've just been putting together a brand new program, that we're doing here. And I think it's, a balance, right? You say, you talk about short-term options too much, Dan, but then you've had great success in doing that, right? So it comes down to saying, well, this is why I think, there's a great need for a diversified portfolio. And what I mean by that as a diversity is like, one of my own tactics and one of the things that we like to look at is, having splitting that portfolio. So we've got, things for income generation over here and then wealth building over here. And then I've always felt for anybody, and I've said, don't be put off by options. They may seem complicated, but most things are complicated when you don't understand them. So options are a Swiss Army knife. We can use them for short-term duration. Like futures traders, you've got to be so disciplined to be consistent as a futures trader. You've got to be ruthless, in your profit taking and patient in your entries. That's why I say patient in your entries, ruthless in your profit taking. You get whipped a lot with that. So I say maybe use options as an alternative vehicle for you to participate in the market. So I think they have that use, Dan. But then I think on the wealth side of things, they're great because those long-term leaps that you're talking about give somebody an opportunity to have real growth in their retirement accounts or their long-term accounts as well. My father always said to me, son, he goes, if you work hard, you'll make good money. I agree with him. And I have, and I do, but you've got to make your money work harder for you. Simply using cash in an account, it's just not a smart use of capital, wouldn't you say? Because to me, if Apple sold off to $20 a share, guess what I'm going to do? I'm going to buy the stock because I can buy a lot of the stock at $20 and I'll collect the dividend, and it makes sense. But it doesn't make sense to be laying out $125 a share for Apple right now because I'm not going to get enough of the stock anyway. The dividend's not going to pay me anyway, so I might as well use my capital for other things. So wouldn't you say it's about using the option for the right scenario?
Yeah, you've got to look, and I don't think people discuss this enough, especially in retail trading, because most of retail trading is focused around day trading and, a daily stock watch list, and it's for all the wrong reasons, right? So
what are those reasons? Tell me. People will have to hear it.
Yeah, so I think people focus too much on this concept. Every day you got to come in and you have a stock watch list you got to trade. I think you've got to look at these indicators, that the news matters, that drawing trend lines and these technical things drive company values, and they don't. And for me, I've had this weird career mix of where I started as a futures prop trader, where I read price action, then I kind of moved towards like fundamental macro markets as a portfolio manager. So I guess I'm blessed in some fact that like I've got a worldview of like a portfolio manager and a worldview of like a futures trader. So it's a good blend. So I think when people look at markets, you've got to understand is like, just because you have an idea on an equity, there's different ways to structure that idea. And when you put your money to work, there's a cost of that capital, and you've got to be smart about your time value of your money. And deep in the money options or leaps, allow you to express those ideas. And I just think people should certainly look at them more and more. And take it back and even another step. You talked about futures, like you have to be like super aggressive. It's a certain personality to make those things work. You and I both know this. But what if you traded S&P futures options?
Yes.
I mean, really. So I'll tell you this right now. If we get to a certain level, I know my schedule the next 2 months is massively busy. It's so hard for me to trade S&P futures, but I already know I can just come in and trade the S&P futures option. And I can go out 6 months in those, right? So
and you can be late to the move, late to the party, not worry about missing out.
You can be way late to it.
It's like casting a wide net, right? You can cast that wider net, but there's plenty to still catch. Would that be a fair way of saying it, really?
For sure. I mean, we were just talking about oil this week in our room. It's like, if anybody's ever traded oil futures, you know how volatile and hard that is. Okay, so we were talking about trading West Texas crude options, and we have a course called Fast Futures that I developed that teaches people how to trade West Texas crude oil through the use of the futures options, right? So there's a ton of different ideas on markets, and it's not just technical analysis. It's not just risk management. A lot of it, in my opinion, is how do you structure that idea? right? If you want to be long Dow stocks, okay, that's good, but let's dial it down deeper. What Dow stocks do we want to be long, right? What presents the best risk to reward ratio? What's going to give us the best capital return on that stuff. So there's a lot that goes into this. I think we do a good job in our community of explaining it, not just being, hey, look, here's the indicators, here's a daily watch list, and you're an investor now. So
Well,
it takes a lot more to succeed at a certain level. So
I've always stressed that you've got to treat this like a business, and I know you come from the same stock. It's people don't like. I'm dull right now, and I'll adapt. But right now, for last however many months, I just trade for my Dow futures every day. I like the way they move. It's the perfect balance of volatility, and people are like, oh, the Dow, it's not the real market. I don't care. I don't care where I make my money. I just want somewhere safe to make my money. I don't care. I used to trade the NASDAQ every day inside out for nearly a decade, and the thing's like a rabid dog. Graham Spruce, one of our instructors, calls it the honey badger. I just, it's, when it's kind, and when it's nasty, it's nasty. It's about picking that, and I know you personally, you really put an emphasis with our students on focusing on a very small watch list, right? Tesla's on my watch list, Facebook's on my, Apple's on my watch list, a lot of the ETFs are on my watch list. It's a great way. And then on the side of it as well, somebody could be looking at the show right now as an investor and going, okay, that's cool. But not only could you use less cash, and I call it stock market participation minus stock market risk. That's the great thing about using options as a vehicle. The other thing to think about is they are a Swiss Army knife, Dan. You can insure existing positions, with those options that you've got as well. And you could eventually rent stock out. I mean, if someone come to me right now and says, oh man, I've been owning Microsoft for so long, it's doing nothing. Or I own a ton of Apple at $100 a share, but it's not really doing anything. I'm not getting it. So why aren't you renting the stock out? And they're like, what do you mean? I said, would you have a portfolio of houses? Would you have 6 houses and leave on the beach, on beachfront in the middle of the summer and leave them empty? And they're like, well, no, I'd rent them out. I said, well, you've got beachfront real estate right now with Apple at $100 a share and you're not doing anything with it. Rent it out. They're like, what do you mean? I said, you sell covered calls, you give someone else the right to buy it at prices where they're never going to probably get that right. They're like, It's about just understanding, isn't it? And also picking it, because I like that. What I don't like is when people start selling options naked and, trying to scalp premiums. That always reeks to me of, and no disrespect, by the way, no disrespect to anybody who does that, but you need a lot of money to do it. Wow. You need at least a 6-figure account to make it worthwhile. And also it's like, well, for all the effort that goes in, why don't you just learn to time the market a little bit? Because for me, when people are selling premium, they're not attempting to actually really make a directional call. What's your experience with that, Dan? You ever sell options? Because they are risky if you don't know what you're doing, right?
So look, at both funds, the family office, and then both as a PM, I sold a lot of premium, but you have to understand, like, the accounts we had were like deep 7-figure accounts, like big, right? So, and the margin, how we were margin was different too. So I could sell all day long, let it go against me heavily, and it's just like, it doesn't matter. But when you're trading with, even a $250,000, you can get away with it with portfolio margin. But you just have to be careful. Now, I'm not against it, right? So I'll just tell everybody here now in the show, it's like, on Tesla, if we get to a certain level, because the way the options are pricing right now, it makes it too hard for me to not go and sell naked puts.
Sure.
Because number one, I don't mind owning Tesla stock, right? But that premium is so hard to get away from. And this goes back to another facet, is like, look, we're talking about options, about selling and directional and looking at equities. All this comes from a foundational kind of concept. If you understand how to look at markets from a certain perspective, you can then have these conversations, right? And you can use a Swiss Army knife like you're talking about, and you can use options in different manners, but you've got to understand, the foundation of markets and how it all works. And I think people get too tied into, like you're saying, hey, I'm just selling call spreads and put spreads. I only trade futures. Like, I think if you want to make a certain amount of money, you get to a certain level, you've got to be dynamic in how you look at markets. And I don't know the best term for it, but I guess the way I could say it is you've got to be like a portfolio manager perspective. Yeah. You've got to look at the whole playing field and say, okay, look, I can do this, this, and this. And you're not just hyper focused, like, oh, I only trade S&P futures based on indicators.
Right.
Right. If you have a whole view focus of the field, you can look at macro and say, hey, look, if the yen's doing this, regardless of what an indicator is saying, S&P should do this. If Powell says this, equity should do this. If bonds do this, actually, there's all a massive correlation, which allows you to put positions on. And obviously options, in all facets. Even I think you can even trade options on Forex, right? Right.
You can. Unfortunately, there's not a regulated exchange that they go through, so it can be a little bit dicey with the spreads, but it can be done.
Yeah, yeah.
For anybody looking at the show right now, they obviously, they need to understand it. But I'd love to just go through this, and I'd love your opinion. Let's talk about it. And I talk about the wins, I talk about the losses and everything. Let's go over to the charts, and we've been talking a little bit about Apple, so you'll see it here. Here on the charts right now, you'll see, and I've just marked it off an area where, I've been expecting, you and I both have been a little bit more bullish on Apple, expecting this to rally. The trend is still strong. It's up. It's a good value stock. We're seeing, obviously, we need a little bit more kick in the NASDAQ. But here's the thing, that whether it's going to go up or down, we know, any trader or investor worth their weight in gold is a risk manager first and foremost. They know when to get things out. But just, anybody looking at the show right now thinking, I'm a bit confused on this kind of stuff. Why do I want to do these options? Let's just break it down to its most basic factors, okay, for just a second. Let's zoom in right now. Let's assume, and I love the way you use the term thesis, Dan, so let me just start this off again. And, let's assume we've got a thesis right now, and you should be able to see this, that Apple's going to start pushing a bit higher. Right now, we're trading around, look, you can see $122.09. Let's say that we were bullish. We expected this thing to go up from 120, and we bought it at 120, anticipating that we're going to get more upside out to 145. Guys, you want to go and buy Apple at that price, and it is relatively cheap compared to where it was, 6 months ago. It's a good potential opportunity. The problem you've got right now is on that stock, to go and buy that share, you've got to pay $120 a share on that. Let's just put that into perspective. 100 shares, 12 grand. 1,000 shares, 120 grand. Most people don't have 12 grand laying around. A lot of people don't have, say, well, I'll buy 10 shares. That's $1,200 you got to outlay. A lot of people don't have that, and they want to participate, but they're priced out before they can. The other problem you've got is, hey, just say you go buy 10 shares and you have a cost of $1,200. Let's keep it to that. Let's say you've got a little bit more money and you've managed to buy 100 shares. Let's put the 100 there. That's going to be a cost of 12 grand. This thing drops down to $100. You lost, 2 grand of your money just like that. 20% of your money just gone like that. That's a big exposure. And that's off-putting for people. The question is right now, if the stock was down here, maybe I'd be a little bit more inclined to buy it in cash. But here's the great thing. We could go and buy options. And in this case, in our room last week, we were just buying some calls on here. And we were buying the right to own it up here at $125 a share. The cost on that, and this is what I absolutely love, Dan, was $400 to participate. $400. And right now, premiums are good. Now, ask yourself a question. Do you want to be going into the market and outlaying 12 grand to potentially own, 100 shares of Apple? Or do you want to outlay 400? Because here's the thing. Apple could fall off the edge of the cliff. The NASDAQ could roll over any day. My worst case scenario is I'll lose $400. Because I know if I'm 12 grand in and this thing's peeling off and now I'm down at $70 a share and I'm down to 7 grand. Most people, what are they going to do, Dan? They're going to hold on and hope it bounces back. Yep. And before they know it, they've lost more than half their money. Right? I'm ruthless about it. I won't even lose the $400. I'll give myself a risk of $200. If I lose half the premium, I'm done on the thing, I've got alerts set up to go. But what a great way. To me, is that a better use of capital in your opinion, Dan, doing it that way?
100%. I mean, look, it goes back to this. Look, it's a disservice that this industry has taught everybody that day trading is how this works, right? So, it goes back to this concept that, like, when people buy shares, everybody thinks it's like you got to get it instantly in 1 or 2 minutes. If it doesn't move your direction, right, you're down $20, you panic and you sell. Like that's.
Well, they're also exposed. They're also exposed too much, aren't they? Which affects their P&L.
Yeah, right. Because look, when they put that money on and it's $10,000, even with a stop in place, they can't disassociate from the $10,000 that goes in because it's a lot of money in real world terms, right? So they panic. Yep. Okay, so when you trade options, and I mean this, because when I first started teaching in 2014, it was all futures traders, okay? And you and I both know futures traders, not all of them, but some of them that come into this, if you've never done futures and you get into this business and you see how fast P&Ls move, it's a weird thing to get accustomed to. So a lot of futures traders I worked with struggled, not because they didn't understand margins or, market opens and closes and Bollinger Bands and previous high, previous low, but it was a psychological factor.
They make it about the money, right? Look, I'll tell you it right now. I'll be very frank with people. When I'm up, $1,200, $1,500, $2,000 in, 10, 20 minutes, I want to take it. You know, why would you not?
Yeah.
Right?
Yeah.
You know, we're only human at the end of the day, right?
Yeah. And so options give you, like you're saying, I mean, you know your defined risk on it. Even with the leap option, it's going to cost you $4,000.
Yeah.
Like you know what your exposure is, and if you can say, if you can look at the downside and say, all right, at the worst thing that can happen to me is this, and you can accept that, you can put that trade on, right? And you have to really accept that. And I think more people should look at them. I think a lot of people have. I mean, if you need any more convincing, right, don't even just take our words. I mean, you can go and look at a lot of professional money managers. I mean, I recommended a book to our students. I actually have it literally right here. You can be a stock market genius. So I've read this 3 times.
Show us that one again there. Show us everyone can see it. There you go. Okay. Cool.
And don't get fooled by the title. I think that his publisher probably made him write it this way.
That'll sell copies because people think they're going to buy that and they're suddenly going to be millionaires next year, right?
Right, of course. And the guy who wrote it's really smart. It's Joel Greenberg. He runs a hedge fund, Gotham Partners, out of New York. And there's bits and pieces that I've used, and he talks about leap options. And look, a lot of these massive $1 billion, $10 billion hedge funds use options for exposure in the markets, right?
Yeah.
So just don't. My advice to a lot of you watching is, don't think that the weekly options are just the way to go. I know it's exciting. I know you can make a lot of money if you get it right. Trust me, I've done that. I was there the day the weekly options came out in 2011. Seriously, I was in Los Angeles. I was working and living there then. This is 10 years ago. I was there on the day those were released. I know how crazy they are. But if your P&L swings are too crazy, look at longer term options. Typically, it helps people. So, yeah.
So awesome, Dan. Really appreciate it. It's a great time. Never been a better time, really, to start really diversifying that as well. We love hearing that as well. And there is something for everybody as well. Like I said, biggest mistake, I've been doing this for nearly 18 years, and the biggest mistake I made, I didn't really start getting into options until a couple of years ago. So if I look back on my career and say there's one big thing I regret, it's not getting into it sooner. And that's because I let it put me off. I let a lot of the mumbo jumbo and all the fancy stuff. You don't need all the rocket science behind it. It's all about keeping it simple. It's one of the things I pride. What we do at StockAbility is we keep it simple. We don't care about the Greeks. We look at directional and we take it from there as well. Dan, it wouldn't be a show. It wouldn't be a Take Stock Live without your call, my put. And as always, I like to give my guest first dibs on it. Are you bullish or bearish? Is it your call or are you taking the put today, my friend?
I'm taking the call side. I know
you're taking the call. You're bullish. What are you bullish on? Let's pull the charts up and take a look, my friend.
So let's see. I want to be. Let me pull my chart up here. Give me a second. Here, how do I? Can you let me share my screen?
You can go ahead and share your screen as you would, and then I can go full screen for it as well. Let's give that a go and see what we can do. Okay. This is new technology we're dealing with, so let me go ahead and when you share that screen. If it doesn't let me,
you can share yours, but it's eBay. It says
that's fine. Go ahead and you try and share it, and if we can do it, we will, and if not, I'll pull up eBay over here as well as a backup. Okay, my friend.
It's disabled on my end, so you've got to do it.
Yeah, I got to do it. All right, no problem at all. That would have been cool, but we can do it in the future. Let's take a look. Here's eBay. Always have a backup plan when you're broadcasting live, my friends. Here we go. Here's eBay. Let's take a look. Tell me what you're thinking is, Dan, and I'll be your wingman.
All right, so I do have this in my portfolio, full disclosure, so I'm not just talking the book. But I like this stock long. So I think this has, so we're talking about growth stocks. I think everybody's known about eBay. I used this when I was in high school to sell stuff on. I think it's undervalued for multiple reasons. I think what's going to help this thing to create value is recently, anybody knows what StockX is. In fact, their warehouse is literally a mile from my warehouse here. They added something very similar to StockX. The fees are less. I think it's nothing right now. I think it's free to use that service for the shoe stuff. I think this is a lot of room to run. I have a price target of $90 to $100 a share in this. I don't think it's going to happen next month. I don't think it's going to happen, next week. I think this is a 6, 9, 12-month play on this stock. But long term, I like this. And in fact, in conjunction with the show today, I have Elite options literally on this.
I got to say, one of the big tells for me that tells that, and I'm looking over here right on the top left at a monthly time frame, everybody, ladies and gentlemen, you'll see on here, monthly time frame. The fact that we pulled down and we held this $46 area so well and we're charging ahead, to me is a really good sign. Dan, that seems like a real benchmark to me, that $46 area right now as well on that. I like to go big on those time frames. On these weekly, on this daily chart on the right-hand side, we are seeing some nice strength on here as well. I do see that we've got a little bit to get through as as well. But just looking at this right now, short term, Dan, looking at the weekly chart as well, I wouldn't write off a test of around $62 to $63 short term. Wouldn't be surprised to see a little bit of a pullback on that before we go higher, but definitely looks like a lot of upside. Easy, I think that's got $63 written over it. Wouldn't you agree right now?
Yeah, for sure. I mean, look, we were talking about growth stuff. I mean, I think this is all-time highs, right? This is
all-time highs are 64.85. All-time highs are 64.85. So ton of sellers up there, but all I see is wide open space on this. All I see here up in this region is just wide open space for this thing to just potentially just keep grinding its way higher, Dan, personally.
Yeah,
so
I think so. So that's mine. I know you took the short side, so I'm curious.
Lovely. Well, I feel almost rude. Brian Cartledge is asking me, can we take a look at crude oil? I almost feel like I'm cheating on it, but I am actually a little bearish on crude oil. So, Brian, you read my mind. As any viewers on the show, I've been eyeballing $65, $70 on this thing. I hope anyone watching the show, not that you need to take my advice, maybe would have gone and investigated that for themselves, but man, that thing has been on a tear. I have to say, I still see more upside on it. I think oil's got a pretty decent future. I mean, we got a lot of work. Let's go take a look at this chart right here on the monthlies right now at the top left. So I'll highlight this. We got this massive area at $70, $75. We've got to deal with that. So don't get me wrong. That's not happening anytime soon. A little bit too far, a little bit too fast. I kind of have to say. I would love this thing to pull back to about $40 a share. I'd love to say I'm bearish all the way down. I'm not, though. I'm not that bearish on it all the way down. I gotta say, I'm really on the daily charts where I'm seeing the clearer signals, Dan. I want to pull back to around this area. In fact, let me do this a little bit cleaner. I want to pull back down to around 52 bucks on this. And that's not a lot on crude oil. Just seeing a little bit more downside, filling up some space on here. And then off we go to the races again. To me, this is a really big area. Again, I'm looking at it on the weekly charts. I'm seeing it as well. Nice little bit of buying activity in this region. At least 50 bucks around there at the moment. Short term, I got to say I'm bearish on it. But then I'm bullish when it gets back to around $50 to $52. Thoughts on that, Dan?
Yeah, so look, I got short this week through West Texas crude options. 55 strikes on that. So yeah, I'm with you. Monday we looked at this in GTS. So we have our guided trade session every Monday mornings, which I lead. Yeah. One of the points this week we talked about was being short this. I agree with you exactly, 50, 55-ish.
I will just say this, though, for anybody right now. I know a lot of people like to do short-term trading on it right now. Not the time to be a seller at the moment. What I think, and I wouldn't be surprised to see, is we get a little bounce off of this here. And then what we're seeing here is some nice selling pressure coming in. So my prediction would be a bounce back to here and then the next leg to the downside as it starts to develop. As you know better than anybody, Dan, markets don't tend to just move in a straight line, do they? So I wouldn't be surprised to see it bounce, but feeling a little bit more bearish down to around that area as well. So Brian, I hope that helped as well as I put some ideas out there with Dan on this. Dan, what's the rest of the week looking like for you, my friend?
So tomorrow's options expiration. I really try to avoid the I haven't actually put a single trade on today. I won't put one on tomorrow either. So I just kind of getting some light work done, try to enjoy the weather in Arizona before it gets to 120 in about a month and a half.
Beautiful.
And that's it. So
beautiful. Well, I know, Dan, we got a couple more at StockAbility.com, and you can see this. I'll just bring this down so anybody can see this on here, so everybody can see because your screen's there. Go to, guys, StockAbility.com on here. You'll be able to see Dan and the rest of the team on there. We've got webinars coming up at the end of this month I know you're going to be a part of. If we scroll right down, we're going to be looking at the crisis-proof business, Wednesday, 31st of March on here as well, and also trading from a side hustle to full-time income. Dan, I know that's one of your favorite topics on there as well, so I know you're going to be doing at least one of those side hustle to full-time incomes as well, if people want a little bit more information on that. And I'll recap on that just before the end of the show as well. For anybody who is interested in joining us for any of those complimentary webinars as well. Dan, when you're heading back to Puerto Rico, anytime soon?
I have to head down there in 3 weeks, 4 weeks to collect keys and do some title stuff, and then get some furniture in this house and nice. Get a trading computer set up.
Nice.
And then I think I've got to get the I gotta get like a island shirt, you know, one of the Tommy
Lovely.
Bahamas.
Well, you can wear your vest over that as well.
I'm
I
gonna
will
be the
say
island
this,
man,
it's
so
not that far from where I am, so I will be visiting very
no,
soon.
you guys gotta come down.
Before
So
I
I
move
mean,
out, and head out a little bit and stuff. You're going one way, I'm going next, although we're going to meet somewhere in the middle. So I will be one of the first guests down there. Dan, it's been a pleasure having you on the show. Don't be a stranger, my friend. Let's have you back in a couple of weeks as well. Good luck on those positions. Thank you for sharing the knowledge. Always a pleasure to have you. Have a great week, my friend.
yes, have a good day. Bye bye.
Thank you. Ladies and gentlemen, that was Daniel Bustamante joining us there from StockAbility. Always love having Dan on the show. Always love having him on the show, joining us live on this. It's been a while, but gosh, he has been busy, it seems. Buying a new place out in Puerto Rico as well and so on. But offers a great insight to us all there in the world of options trading. On behalf of him and the team, I couldn't stress more to start raising your knowledge and your level, and worthwhile investing some time in developing that skill. If you're interested in finding out more about what Dan was speaking about, best thing you can do is to go over to StockAbility.com. If you're new and not been here, StockAbility.com, and check out one of our complimentary webinars. Go to the homepage, scroll all the way down to the bottom on here. There you'll see Dan, myself, and Ryan Watkins, our lead coaches, and we have a number of complimentary webinars that are filling up pretty quickly as well on the crisis-proof business, trading from side hustle to full-time income, which we're doing twice on Wednesday 7th of April and also on the 20th of April. And we're doing those at different times, guys, as you can see, to give everybody a great opportunity to kind of join us as well. We are aware of time zone differences. We are aware of being worldwide. We'd love you to join us on one of those as well. And Dan will be sharing a lot more in-depth knowledge on how he leads his live trading room into trading options with a safe way for not just short term, but for also long term exposure. We'd love to see you there. Get in touch with us any way you can, and we'll make sure that we'll help you with all of that as well. Man, what a show. It always goes so quickly. Just come up to the top of the hour. When I first started doing Take Stock Live, I was always like, this is going to be about a 35 or 45-minute show because I thought we'd run out of things to say, but it clearly isn't the case as well. Requests have been coming in. Can you do more than once a week? We will see. I have to do a little poll with the guests right now. Would you guys be interested if we started doing more than just once a week? If we did like a 30-minute show a couple of times a week? Love to see your comments coming in right now as well. We are willing to do that, starting to bring in more, do more guests, more live analysis. I'm more than happy to do that. We're getting through a few things, but we are considering doing more on this show as well. And if you, the guests, keep coming, we will keep broadcasting live as well. Thank you, Pedro. Thank you, Chris, as well. A lot of you guys shouting out on this. We'll happily do that too. And a lot of people have been saying, hey, I'd love to see more of the trades that you guys do. My advice to you is to go to the YouTube channel. Go to the StockAbility YouTube channel. You will see we are regularly posting trades from Dan, Ryan Watkins, and myself. Little insights and snippets about what we get up to in our community as well. And just helping you out with everything that we do in that respect as well. So please go to the YouTube channel and we can help you out a whole lot more. Thank you, John. John Clifford, the more the better. That's what we keep in. That's what we're all about here at StockAbility. Give as much as we can as well. So if you've not yet done so, one final time, head over to the YouTube channel, StockAbility, and find some of those lessons as well. And hit subscribe, you'll get those as well. And also you can look at all the reruns of Take Stock Live on there if any past shows that you missed as well. We do Your Call, My Put regularly. So again, great for you to go back and look at some of those things might still be valid that we talked about in the past as well. Also, if you just love sticking to Facebook, here on Facebook Live, we are here every Thursday at noon. Every Thursday at noon, broadcasting live, and this recording is also available on the Facebook Live channel too. Guys, we made it pretty easy for you to watch us live or see the recordings. Can I once again say thank you to everybody who's tuned in the show? Let's give a little shout out to John, Chris, Pedro, Brian H, Brian C, Mike Goosetree as well. There he is. Dan Joseph just around the corner. Side and Dana, Parker, Louise and Max. A lot of people in the room and all you guys who I didn't give a shout out to as well. Thanks for making this a great show. We're building traction. We love it. We love being here. We're going to try and be here absolutely more as well. Guys, my name is Sam Evans. This has been Take Stock Live, powered by StockAbility. Have a fantastic rest of your week. Enjoy the weather. Stay warm as the doors are opening. Let's stay positive for the next couple of months as well. And I will see you all next week here on Facebook Live at 12 noon Eastern. Have a great rest of your week. Take care, everybody. Thank you.